Welcome to this 7th tutorial video about using RealTest. In this video we're going to bring together several of the things we've learnt in the previous tutorials and build a multi-strategy system. So let's get started. In the previous tutorial video we developed this system, which is a rotational system using the Nasdaq 100. And you may remember that it only trades once a month, but it selects the strongest 5 stocks and trades them only during bull markets and uptrends. And we got some pretty good results on that. In fact, if we see here, the NDX rotate gave 36% rate of return, but a very high drawdown, 36% drawdown, which is way more than most traders will feel happy with. In the video previous to that, we'd taken a look at this mean reversion system, and that's almost the opposite. It trades very frequently on a daily basis. In fact, the maximum number of bars that it will hold anything for is 5, and often a lot less than that. And it trades a much broader universe, the Russell 3000, so including a lot of smaller mid-cap stocks as well. And that gave almost the opposite kind of results. It gave a return of just 17.8% and a maximum drawdown of 15%. And what we'd like to do is perhaps combine the best of each of these systems. So if we take a look at NDX rotate, we found there were big periods, here we've got a year and a half where it just doesn't trade at all. And if we take a look at the mean reversion system, we can see that it starts off really well after 2000, but there's quite a long period here where it really doesn't do very much at all. And those periods are in different times for the two strategies. So this is a perfect example of where we might want to combine strategies together. And we're going to take a look at how to do that right now. So you may recall from the previous tutorial videos that the way RealTest backtesting system works is that it starts on the first state specified in the test settings and then starts with the first strategy listed in the script and works through each of the individual stocks to see if there are any entries or exits in that strategy. And if you have more than one strategy, it then repeats that on the same date for strategy B and C and D and so on. And this whole process is repeated for 3 passes. So it's repeated at the open of the daily bar, then it's repeated again intraday, and finally for the close to see if there are any entries or exits. And you'll notice on the right hand side here we also have not only the entries and exits are being recorded, but also stats and equity, and we're going to take a look at that today because those are very important when we start to consider multiple strategy systems. Now the first thing we're going to want to do is to make sure we've got all the data for both strategies in our imported file. So as you can see from this NDX rotate strategy, we can include more than one include list. We've got here the Nasdaq 100 and the SPY ETF, which we're using as a bull market indicator. And we're going to need for our mean reversion to have the Russell 3000. So we're going to copy this and paste that in as an extra include list line. And we also need to have the Russell 3000 constituency, and that will make sure that we can check whether a stock is actually in the Russell 3000 at the time of testing. Rather than saving this as ndx.rtd, we're going to save this as combined, and we're going to make sure that that is also the name of the file we're loading in for our test, just like that. And now we'll set that importing. It's going to take a little while. Next, we need to combine the data sections. So we've got the data here for the NDX rotate variables, and we're going to take the data section for the mean reversion system, and that's these lines here, copy those and paste them in here. And it's very important that we make sure that we haven't got any variables which are the same name. So just flicking through these, we can see that they've all got a different name, which is good because otherwise we're going to get a conflict because it won't know which one is defining that particular variable. We need to do the same for the parameters now. So we've got 2 parameters for our NDX rotate strategy, and we now need to find the parameters used by our mean reversion system. Well, we've only got this one here, which is the number of positions. But to make that a little bit clearer, we're going to rename that as MR_pos so that we know it's the number of positions for the mean reversion system. We're also going to add 2 extra parameters here, and they'll make sense a little bit later on. The first is NDX allocation, and we're going to set that to be 50. I'll explain why in a moment. And the second is MR allocation, and we're going to set that also to be 50. Now to actually copy the strategy itself. So we go into the mean reversion one and we can simply take this strategy here and copy it and paste it into our script here to combine the two. There we go. Now you'll notice that there are several items here which are in common between the two strategies. And it's actually possible to just write those once so that we can make changes in one go, or actually just shorten the whole script. And you do that by using a template. And I'm going to use template common as the name. And we're now going to define several items. So for example, quantity type is the same on both strategies. It's %, like that. And we've also got other items which would be useful to have across the board, and those are the commission and the limit extra that give realism to our strategy. So we're going to put those in as well. And now we can simply reference this here, this common template, in each of our strategies. So we do that using a statement called using common. And we can do the same in this one, using common. And now we can delete those lines that are the same between the strategies. Let me do that. Get rid of those and those. And what this does is it means that each strategy, when it's run, will come across this using common statement and will insert these three lines into the strategy. So we don't have to repeat them every time. Now, so far we've got two systems, the NDX rotate and the mean reversion system, which are both long systems, so they both buy shares and sell at the end of the trade. But what about if we want to actually benefit from when markets go down? Well, we can take a strategy like mean reversion long and actually create a mirror image strategy of it called mean reversion short. So I'm going to do that now. And we're going to specify in that a very similar system to mean reversion long, but it's going to do the opposite. Now, just as we used a common section template here to take out some elements, we can do the same for the mean reversion one. So I'm actually also going to add in another template. So template, and we're going to call this mean reversion common. And we'll start that by a statement saying using our first template, common. So every time it uses this template, it's going to copy in the bits from the first thing. And then we're going to look at what would be common between a long and a short system. Well, the first thing that's going to be common is the quantity. So we're going to take the quantity there and copy that into our common section. And we're also going to take the maximum number of setups and the setup score, both of which will be the same for a short system as for a long system, and put those in there. Now we don't need to have using common in there anymore. We can just change that to using mean reversion common. So when RealTest takes a look at this strategy, let's take these lines out that we've just added in, and here, it will first of all see this statement here for mean reversion long, using mean reversion common. It'll take a look at mean reversion common and it'll say, using common. So it'll copy these three lines in, and then it will copy these three lines, and all of that will be inserted into here. So now in our mean reversion short strategy, we can just type using MR common, and we'll get all of those lines together. This time, however, the side is short because obviously we're now shorting the market. And these three lines here that define how the mean reversion system works are also going to be copied in, but they're going to be reversed. So our entry setup for a short system is going to be that the close is higher than the 5-period EMA plus another ATR, and that we don't already have a position, that shares are equal to 0. And the limit, it's then going to be further above that, so it's going to be the high plus. Now in the long system we used half an ATR. It turns out that it's better to use a full ATR when you're shorting, because short side shares tend to stretch further before they collapse. And the exit rule is going to be the opposite. It's going to either be that we have the close lower than the previous day's close, in which case it's a down day, or the same as before, we're going to have 5 bars, in which case we're going to exit. Now, That would work quite well, but you'll find that there are some shares which really you don't want to short at any time. And to prevent against those, we're going to add in one more element. And rather than typing this in fully, I'm just going to paste it in. And so we're going into the data section here, and I'm going to paste this variable, can short. And it basically says, stay out of any stock unless its close is less than twice the 100 period EMA. In other words, if something has doubled in price very, very quickly, we really don't want to short it because it's probably being hyped somewhere, like a meme stock. And the second section is this rather obtuse one, top info TRBC, 4. That takes the first 4 numbers of this item here, info TRBC, which is the industry classification for the stock, and it makes sure that it is not equal, that's that sign there, not equal to 5620. And you wouldn't know what that is unless you've looked it up in the documentation, but it basically says avoid biotech stocks. We don't want any stocks where there might be an FDA announcement suddenly saying that they've discovered the miracle medicine and the stock goes up 100 times. That obviously would be a disaster for our system. So we need to add that into our short system. So we are going to have an empty setup of it's in our universe and we can short it and the rest of the criteria as well. Now the final change I'm going to make is these extra parameters here. NDX allocation, which is set to 50. So rather than having 100% divided by the number of positions for our NDX rotate, I'm going to set it to this parameter, which is 50. So we're only having half of the position size that we would have if this was run as a single strategy. And we're going to do the same for the mean reversion allocation, which is currently set to be 100 divided by the number of positions. I'm going to change that to being MR allocation, and you may remember that we also changed this variable here, so we need to call this MR pos, and the same here, MR pos. And now we can apply this to check that our script is correct, and it looks like it's fine. It's now calculating the formulae for us. Now I want to demonstrate 2 extremely useful shortcut features that RealTest has that I use a lot of the time when I'm testing a multi-strategy system. So the first is that you can place your cursor next to a strategy and right click and select this item here, comment selection, or use the keyboard shortcut Control and /. And what that does is it actually comments out the whole of that section. So effectively it disables that particular strategy. And I'm just going to undo that now. So I could do that for these 2 strategies here. I'm just going to use the keyboard shortcut and I'm going to comment out the mean reversion long and the mean reversion short, like that. So now I'm left with just the NDX rotate. And to check that I haven't made any mistakes, I'm going to run the script with just this single strategy. Now, by default, when you run a script, it's the script name that becomes the list item in the results window. And we would have up here tutorial combined, but I don't want to do that because I've only got one strategy. So I'm actually going to use this test name here to say this is NDX rotate, and that will rename the test. So let's run that test. Here we go. It's running through pretty quickly. And when that completes, we should see that we get the same results as before, which were 36% and 36% drawdown, except reduced by about half. Now you'll notice that we do actually get a higher drawdown, and that can happen when you have a smaller allocation, but we've got roughly half the return, so we know that's working okay. Now let's do the opposite, put in the mean reversion long, and comment out this, and change the name to be MR long, and run that part of the strategy. So it's running through fairly quickly, and when we switch to the results window, we'll find that in just a moment. MR long appears, and that's giving a return of 6% or nearly 7% with a drawdown of -7%. And now we're going to do the same for the short strategy. So take out the long strategy, enable the short strategy, change the name, and run the test. And we're just doing this so that we make sure that each strategy is profitable and we get an idea of the contribution that each one can make. It's a final check before we start to combine them all. And you'll see here that the short strategy gives a return of about 5% and a drawdown of -7%. So all three strategies are profitable, and if we were to combine them and get all those drawdowns all together, that might not be a great system for us, but at least we know they should be profitable when put together. So the question is now, how do we actually make sure that RealTest allocates the right amount of capital to each strategy? And to understand that, we need to take a look at how RealTest does this. So let's imagine we have a system with 4 strategies, A, B, C and D. And we have an initial account size which by default in RealTest will be $100,000. How does RealTest decide how much to allocate to each strategy? Well, by default it allocates the whole full account size to each strategy. So strategy A, if we specify a quantity of 10% and 10 positions, will use up the whole of that account equity. It'll have 10 positions of 10% each, making 100% of equity used. And strategy B, if it was to have the same quantity and positions formula, would end up also using 100% of the initial account size, so 200% of our initial account size would be used, and so on for C and for D. And this, of course, is possible in many trading accounts if you have the ability to have leverage. And leverage means that you can buy more shares than you actually have in money. In this case, we're buying, if all positions were taken, we're buying 4 times the amount that we actually have in the account. So if the account size is $100,000, we would be buying $400,000 worth of equity. That's all very well and good. It can make the returns increase considerably faster, but it can also produce quite large drawdowns. So how do we get around that? Well, the classic way to get around that is to split the account into 4, in this case, because we've got 4 strategies, and to shrink down the quantity. So instead of using 10% per position, we're using 2.5% per position, and we've got 10 positions, so that's 25% for each strategy. And this would be what you would do if you were running 4 strategies in, for example, a retirement account where you can't use leverage. So how does RealTest keep track of how much equity to assign to each strategy? Well, there are a series of statistics that it keeps bar by bar to keep track of what's going on with each strategy. And these are accessible as variables using S dot. And if you look at the documentation for strategy statistics, you'll see there are very many statistics you can tap into. Each strategy has its own set of statistics, and they're accessed using the same variables. RealTest has a particular command that we use to determine how much equity is assigned to each strategy, and that is the allocation command. If we set allocation to be s.start equity, well, start equity is what the test starts with, in this case $100,000, and that will mean that every day RealTest resets the amount of equity it has in its pot for each strategy and will reallocate that to be the same amount. And as a result, the statistics will simply show as non-compounded. Anything you make from one day will not be carried over to the next. It's the equivalent of if in real life you were withdrawing any profits or topping up any losses each day so that you always started with $100,000 every day. Much more common in backtesting software is to actually keep track of how the equity changes over time. And to do that, we would specify allocation is s.equity. That's the equity starting with $100,000 but then adding on any profits and subtracting any losses on a bar by bar basis. And obviously this will allow any profits to be compounded or any losses also to be compounded. And that can be put in place for each individual strategy. The one downside of using compounding is that the backtests can get huge. So if you run a backtest over 20 or 30 years, you can suddenly end up with an account size of several $1 billion, which of course is unrealistic because there probably isn't even that amount of trading going on each day. But there are ways of dealing with that. It's important to recognise that s.equity is actually mark to market. So it doesn't matter if you actually close each position on each day, it will actually just take the closing price and each day it will show how much each position that you have open is worth. So even if you ran a buy and hold strategy, it would still change s.equity during the whole of the backtest. So the statistics are accurate, up to date, what your broker would expect you to be able to trade on. So let's imagine that we specify this new command, allocation is s.equity. At the start of each particular bar, the strategy is going to work out 2.5% of the current equity, and it's going to place that into each position. So each strategy can take 25% of the whole starting equity on the first bar. Let's say that the strategies do differently. Well, we might find that, for example, the strategy A and strategy B both make a profit. Each strategy keeps track of its statistics like S.equity separately. So now strategy A's equity is larger, and that means that the next bar it's going to allocate a larger amount of dollars because 2.5% of that account size is now considerably larger. And strategy B's has grown a little bit, so again its allocation for any new positions is going to be slightly larger. Strategy C didn't change at all. Strategy D actually made a loss, so its equity is a bit smaller, and 2.5% of that for any new positions is going to be a bit smaller. And as the backtest carries on, these individual strategies can have their own equity shrink or expand depending on whether they're making a profit or a loss. Everything is independent. Effectively, it's like you've put the equity into 4 separate accounts in your broker, and your broker is actually keeping track of the 4 individual accounts, and then you're using those amounts to determine how much each new position will be in size. So let's return to our system and now add that allocation command. So I'm going to switch back to our combined system. I'm going to take out the test name, because we're now going to combine all our strategies. So I'm actually going to enable all 3 strategies here. And in the common template, I'm going to add the allocation command, and we're going to specify it as S.equity. In other words, each strategy gets S.equity, gets the full equity amount, and then within each strategy, we're going to specify how much. So we're specifying the units in percentage, and you'll see that the NDX rotation is going to use NDX allocation divided by the number of positions. So we're allocating 50% to our NDX rotate strategy, and the mean reversion strategies are going to allocate MR allocation. So again, 50% divided by the number of positions, so they're going to allocate up to 50% each. And because one of the mean reversion systems is long and the other is short, we're not effectively using 150% of our equity, because the longs and the shorts will slightly balance each other out. Let's run that test and see what the results are like. So as it goes through, it's working out the equity for each of those strategies separately, keeping track of them all together and combining them into the results that we're about to find. And what we're looking for here is whether the strategies balance each other out. So when we switch to the results window, we find that the combined strategy system has now returned 19% and has a drawdown of minus 18%. So that's quite reasonable. We seem to have got some benefit. And if we double click this, we can see that the equity chart is nicely smoothing out, so that where we've got positions where the NDX rotate didn't do anything, the mean reversion systems are both actually making a profit. So we continue to make a profit during many of those trading periods. And where the mean reversion system really wasn't doing very much in this period in 2013, 14, 15, we find that the rotation system is making a profit. And so we've got a nice continuous profit upwards, apart from during a couple of periods here. Now, I mentioned before that having each strategy having its allocation as S.equity is like having each strategy run in its own account. But what about if we were doing what's much more common, which is to run all the strategies in a single account? Well, we can do that. And effectively, what we need to do is, instead of using the S.equity as our allocation, we need to use a new command called combined S.equity. This combines the equity from each strategy on each bar and uses that as the basis for new positions. So instead of each strategy having an equity pool that changes depending on its profit or loss, it's like they get evened out and all the profits and losses are combined at the end of each bar, and combined S.equity is what's used to work out the new position sizes. So each strategy on the next bar for new positions will be entering 2.5% of the combined equity. So the quantity size is the percentage of the combined equity between all the strategies. So let's make that change in our script. Instead of specifying an allocation of s.equity, we're going to specify combined s.equity and rerun our test. So at the end of each bar, it's going to take the combined equity that's being tracked by each of the 3 strategies and put those into a pool effectively and use that for the position sizing for the next bar for any new positions. And when we do that, we notice that we get a significant change in results, because what it means is that an underperforming strategy can benefit from the gains of a different strategy. And you'll find that now the rate of return is 31% and the drawdown has actually gone down to 17%. So just by combining the equity, just by using combined s.equity, we can make a significant improvement in our strategy's results. If we double click this line, we can see how each strategy makes up the combined result. So the combined equity is actually this grey area, filled in area at the background, and the individual strategies, you can see the colour here. And if you want to examine each individual strategy, you can just use the number keys. So if I press number 1 on the keyboard, I see just the NDX rotate strategy. Number 2 gives me the long mean reversion strategy. 3 gives me the short. 4 gives me just the combined, and pressing the A key gives me them all together. And I can notice from this immediately that actually we seem to be getting less of a return from the mean reversion strategies than the rotation strategy. So another thing I might like to try is changing the allocation on the mean reversion strategies. So they are being allocated MR allocation, and we can see that's 50%. What would happen if we change that, for example, to 70% and reran the test? And this time we're having 70% for the long mean reversion system, 70% for the short mean reversion system, and just 50% for the NDX rotate system. And you can see it's running that test now, and then you can see the results down the bottom look as if they're quite reasonable. If we switch to the results tab as it comes in, we now get 37% return, but not very much more drawdown. So in fact, just changing the allocation between the different strategies can again be a useful optimization. And the final step I like to do with strategies is to right click the line and show summary report, which opens up in a browser. And this gives us a couple of extra useful things when combining strategies. The first is you can very easily compare the stats in this nice table here, but very helpfully you can see a breakdown of what this would be like to trade. So looking at each year, we can see that some years we make sort of 20%, other years we get quite significantly better results, and 80% in this year here, 86% last year. And we can also take a look at what the drawdowns will be like and how many months you're going to experience a drawdown. It gives you a really good feel for how this would be like to trade it. Also very useful is this strategy correlations table, and it shows whether the strategies are correlated to each other. So if we take the NDX rotate and look at it compared to mean reversion long, there's actually very little correlation between the two, which is a good thing to have when you are trying to combine strategies. If two strategies are highly correlated, then when they go through a bad period, they'll both go through a bad period together. And the same with the short strategy. Again, not a high correlation at all between that and the NDX rotate. If we compare the long system, mean reversion system, with a short mean reversion system, there's a slight negative correlation, but again, it's a very small one, which means we've got 3 systems which are only very, very slightly, if at all, correlated, which is why the rather wiggly lines on the equity chart actually result in a smoother combined equity chart. And that's what we're after when we're trying to combine strategies into a multi-strategy system. A smoother equity chart, a lower drawdown, and getting the benefits from one strategy counteracting the negative parts of another one. So to summarize, there's usually no such thing as a free lunch when it comes to developing trading systems, but if we can combine multiple uncorrelated strategies together into a single system, we can often boost returns and reduce drawdown. RealTest is the very best tool for creating these multi-strategy systems, and over the course of these tutorials, we've built up one such system. I hope it's proved useful to you. Thanks for watching.